Are you struggling with prop firms?
Hey guys, my name is Don Aslam. Welcome back to my channel. Before we get started, make sure you hit that like and subscribe. Today we're going to be speaking about pros and cons about Forex personal accounts and versus obviously prop firm accounts. So this is mostly for beginners who haven't been trading long at all and they're still finding out what's it probably better to trade on. So I mean, if you're experienced traders, do stick along. It will I'm sure this video will have enough tips and helpful advice for you guys as well. So let's get straight into it. So basically personal forex trading accounts allow individuals to trade currencies on the forex market for their own profit. Prop firm accounts allow traders to trade currencies on behalf of a prop firm, sharing profits with the firm. So obviously with personal accounts, it's your own money. With prop firms, they provide you with the money, with the leverage, and that's basically the whole idea behind it. So account funding. Now with personal accounts funded by obviously they're funded by an individual trader. So a trader funds their own trading accounts with their own capital. Prop firm accounts funded by prop firm. Prop firms provide capital for traders to trade their own accounts. I've already mentioned this in the previous slide. So personal accounts use an individual's capital basically, but simpler way to put it, while prop firms account use the prop firm's capital, but they're just looking for traders who know actually how to trade with a good risk management plan. Right, account leverage. Now personal accounts offer lower leverage. Personal forex trading accounts typically offer leverage up to 1 to 50, allowing traders to control larger positions with a smaller amount of capital. Now we're talking about regulated brokers here, guys. They offer 1 to 30. I know IC Markets offers that. 1 to 50, some of them others offer. The unregulated brokers, they offer crazy leverage, 1 to 500, 1 to 1000, like 1 to like crazy numbers. So prop firms are a bit similar. They offer higher leverage. Some prop firms offer 1 to 100, 1 to 200. I know the funded trader offers 1 to 100 or 1 to it's 1 to 200, I believe. So yeah, up to 1 to 500, even 1 to 1000, enabling traders to control extremely large positions with very little capital. By the way, just take a note, the much higher the leverage, guys, provided by prop firms allow traders to maximize profits but also increases risk substantially. So you have to keep that in mind. So just use leverage wisely and carefully. Now risk management. Personal accounts self-managed risk. That's the way you do. You're going to manage your own risk with personal accounts. Traders have full control and responsibility for managing risk in their personal accounts. This requires discipline and experience. Prop firms, on the other hand, manage risk through rules. So you have drawdowns, daily drawdowns, max overall drawdown. So yeah, prop firms use preset rules, position sizing, and risk management to control risk across trader accounts. Less trader autonomy. Now, okay, so with obviously the prop firms that I'm sure that majority of the world is familiar with, especially the beginners, is prop firms you normally trade with phase 1 and phase 2 are demo accounts, and for those that didn't know, funded accounts are also demo accounts. So it's not really prop firm money. I mean, there are other prop firms out there that do offer the actual live, the more that offer the live funding, but maybe mostly into personal accounts. Then they'll let you access those accounts to trade on. But the prop firms that obviously funding pips, the funded trader, FTMO, all the ones that we're familiar with, even my forex funds, even though they are shut down now and we all know why. But they set rules, and basically you have to abide by those rules. If not, then your account just gets shut down. Personal accounts give traders full control but require more experience. Prop firms manage risk across traders through strict rules. That's true. Personal accounts, they do give you one, obviously, because you have 100% full access to the account. You do have to trade with a better mind frame, more discipline, just so that because it's your money on the line, no one else's, it's your own money, so you have to be more careful the way you trade. Now, profit splitting on personal accounts, you keep 100% of the profits. Retail traders get to keep all profits made from trading with their own capital in a personal trading account. By retail traders, that's us guys. Our money that we put in the personal accounts, that's the profits that we make, we keep 100%. Obviously, the small commission you have to pay, that's obviously compared to on the other hand, as prop firms, they take cut from the profits. Prop firms take a percentage of cut of any profits made by traders using the firm's capital in a funded trading account. Now, the prop firms that we are familiar with, realistically, if you think about it, and I realized this after a short while ago when I was thinking about it, even the 20% profit share that prop firms cut, if you actually think about it, they're paying you out from other traders that fail the challenges. So the profit split, the money's already theirs that they're handing over to you, right? That's, you could say, it's their profit. So there's a bit of a I don't know how you want to put it, but it's not really profit cuts if you actually think about it. I just think that they just want to give you out less money, if that makes sense, because it's not as if they're gonna, if you've earned $20,000, let's say on a $100,000 account, if they want 20% profit share, so they get to keep $4,000, but do they really, it's not as if that's their earnings, meaning they just want to give you less money, because who are they're paying you out from their own pocket, if you think about it. So but anyways, let's continue. While personal accounts allow traders to keep all profits, prop firm accounts provide capital funding but take a cut of profits in exchange, like I just explained. So okay, now drawdown, and I'm doing / lifelines. I don't call it drawdown, I call it lifelines. On a personal account, you have 100% access to the account, 100 lifelines. On a prop firm account, majority prop firms offer 10% drawdown. I know the funded trader offers a upsell of 12% as an add-on. So I look at it as 100 lifelines on a personal account, so obviously that's an advantage. With prop firms, for the professional traders who know what they're doing, who have their psychology in check, their mind frame in check, mindset, they can take losses. They only have 10 lifelines, so obviously and also you're not really trading 1% per trade, it's actually 10% per trade with the prop firms, because if you only got 10 lifelines, so then obviously it just makes sense, right? And now account access. So with personal accounts, you have full account control. Personal accounts allow traders to make deposits and withdrawals, execute trades, and fully manage their accounts. As on the other hand, prop firms, you have limited platform access. Prop firm accounts restrict certain features and only allow access to specific trading platforms or features. So obviously they both have their advantages and disadvantages. Personal accounts offer full flexibility, while prop firm accounts limit access to control risk. So basically, with if you just go back with the account access, again, when you make the deposits and withdrawals, you have to fully manage your account. But as when you do with the prop firm, you sign the contract, and once you requested a withdrawal, money just gets sent automatically, to your, whether you want to send it on crypto account or bank account. Okay, so training and support. Personal accounts offer little support. Prop firms provide limited personal support due to large number of traders. Okay, so with personal, basically with prop firms, it can get busy, can get hectic. I've seen that happen, from personal experience. Personal accounts, personal support is actually, it's not that bad depending which broker you're with. Propfirms ongoing training and support, but they're always evolving and adapting. Propfirms provide extensive ongoing training and support to help traders succeed. So it just depends which propfirm you're with, depends which personal broker you're with, simple as. Okay, now it's psychology. So emotional trading. Personal accounts allow traders to make decisions based on emotions rather than data driven analysis, which often leads to poor returns. Enforced discipline. Propfirms require traders to follow strict trading plans and risk management, removing the ability to make emotional decisions. So obviously with the personal accounts, whenever you trade, that's going to be your own money. So every time you lose 1%, 2% per trade, or how much ever you're risking, I would advise to risk more than that. Every time you take a hit, price hits your stop loss, that's your own money from your own pocket. But with the propfirms, it's not your own money, so emotions, it'll be a bit easy to control that. So that is an advantage there with propfirms. Propfirms enforce disciplined trading by removing the ability to make emotional decisions, while personal accounts allow traders to make poor decisions based on emotions rather than data. Okay, now pros and cons of Forex personal accounts. I've just created this. So basically, 80% lower minimum deposit, 65% more control over trades, 55% higher risk of loss, 50% requires more discipline. So basically, these numbers, I got these statistics off a website, but obviously I think it requires more discipline on a personal account. It's basically just spread out. You just gotta obviously have everything in check. More control over the trades, 65%. So I just think there's definitely more management involved on personal accounts. Forex propfirms accounts, pros and cons. So lower barrier to entry. Propfirms have lower minimum account sizes to get started, in trading. More capital efficiency. Propfirms provide more leverage, allowing you to trade larger position sizes. More risk management. Propfirms provide guidelines and risk limits to prevent, blow-ups. Less emotional trading. Propfirms account, it removes the psychological pressure of trading your own money. Again, it just obviously, if you're paying like $400 to $500 for a $100,000 account, if you fail the challenge, you not lost $100,000, you only lost $400-500. So unless it was obviously even unlike on personal accounts, the risk is it's more detrimental if you blow the account, obviously, because that's your whole 100% balance gone. Propfirms provide more resources and structure for new traders, but require profit splits and more rules. So conclusion, both personal and propfirms accounts have advantages and disadvantages. Just depends what suits your style, your trading style, your personality. Personal accounts offer full control but less support, while propfirms account, they provide training. Majority of the propfirms that we're all aware of, like FTMO and the funded trader and all that, I don't believe they provide training, but obviously they offer more leverage and risk management at the cost of profit splitting. But my own personal take on this, guys, would be trading on a personal account. I think some traders say that it's better to trade on a deposit $100 or $500 and then trade on that practice on that. I think that's probably not a good idea, because in the beginning you will make mistakes. It's probably better just to get a $5,000, which is the smallest propfirm account challenge you can buy with a propfirm, which might cost you about $40 with funding pips. $20 with funding pips. I know I keep mentioning funding pips even in my previous videos. It just, I think they're I have no affiliation with them guys, and whatsoever, but I just think their spreads are really good. Their price offers are very good. They're one of the most affordable ones in the whole industry. And yeah, and obviously with everything that's going on with the prop firms in the USA, I believe the government's cracking down on them. So it's the funding pips based in Dubai, so that's why I just use them now. So yeah, coming back to the my thoughts, I think I would trade with the prop firm with the smallest account possible first, $5,000, build my emotions. I mean, if you blow the account, you lost $20, but if you deposit $500 or $1,000 whatever in a personal account, it's not going to be the same, guys. If you blow the whole account, mentally it's going to hit you different. So what I would say is trade on a small tiny $5,000 account with funding pips or any of the prop firm that you like. Doesn't have to be funding pips, and then from there just build up. You will make mistakes, you will blow some accounts, you will feel down at times. I know I did, but obviously the whole point is you never give up, you just keep going. There is light at the end of the tunnel. You'll only get better and better. You got to believe in yourself, believe in your strategy, do the back testing, forward testing, and eventually you will become profitable and also able to pass these. I am going to be starting live trades, live streams. I'm in the UK, so about 7 in the morning AM, so I will be doing some live streams, and I'll be trading on prop firms when I do these live streams. So yeah, I hope for everyone, especially if you're a beginner, if you like this video, guys, if you think it provided some value in any way, hit that like, hit that subscribe if you're new, and hope to see you next time. Take care, I'm out.